Hey everyone, welcome back to Corporate Decoder, the place where we break down those dusty corporate filings to see if the emperor is wearing any clothes, or in this case, if the mining company is digging for gold or just dirt. Today we are diving into Bunker Hill Mining Corp's latest report, and let's just say they've been busy shuffling their incentive plans and getting shareholder approval for some pretty key moves. It's not exactly a thrilling financial statement expose, but there are some interesting nuggets here if you know where to look. And of course, if you like us to sift through this corporate jargon for you, make sure you hit that subscribe button and check out our Discord linked in the description. So, what caught our eye? Well, on the 18th of September of last year, Bunker Hill Mining Corp held its annual meeting, and a lot was decided. Think big changes for their employee stock plans, and some important votes for the company's future direction. First up, they approved an amended and restated Restricted Stock Unit Incentive Plan, or RSU plan for short. Now, what does that mean for the average person? It basically means they are increasing the number of shares they can give out to employees, executives, and maybe even board members as a reward. They almost tripled the shares that can be issued under this plan, going from about 33.9 million shares to a whopping 92.7 million shares. This is a pretty significant boost. When a company dramatically increases the number of shares available for incentives, it often signals a desire to retain talent and motivate key people, especially during growth phases or when they might be looking to attract new talent. It can also be a way to align employee interests with shareholder interests. As employees get more skin in the game through potential stock awards, that could increase in value as the company does well. Then to is also the ratification and approval of their rolling stock option plan. This plan is a bit different. Instead of a fixed number of shares, it allows the company to reserve up to 10% of its outstanding shares for stock options. Stock options give employees the right to buy company stock at a set price. This rolling aspect means the pool of shares available for options can grow or shrink as the total number of shares outstanding changes. Companies use these plans to give employees a chance to benefit from stock price appreciation over time. It's a common practice, but the fact that it requires annual approval from shareholders means the company needs to keep its shareholders happy to maintain this incentive tool. Now, how did shareholders vote on these important matters? The annual meeting on the 18th of September saw about 47.4% of the company's outstanding shares represented. That is a decent turnout, meaning a good chunk of ownership was paying attention. Let's look at the votes. The appointment of M&P LLP as their auditor for 2025 got a resounding yes vote, with over 438 million shares voting for it. That is a clear endorsement of the accounting firm. Then came the director elections. Richard Williams, Sam Ash, Mark Cruz, Kelly Cast, and Pamela Saxton were all up for election as directors. Looking at for votes, they all received strong support, with numbers well over 350 million shares in favour for each. Sam Ash, who is also the president and CEO, received a particularly high number of 4 votes, a good sign that management is seen favourably by shareholders. The broker non-votes are interesting too. These are shares held by brokers that did not receive voting instructions from the beneficial owners. A significant chunk of shares fall into this category, suggesting that many investors might be holding shares indirectly through brokerage accounts. When it came to approving the amended and restated Restricted Stock Unit Incentive Plan, shareholders voted overwhelmingly in favour. Roughly 339 million shares said yes, with only about 16.4 million against it. This confirms that the shareholders are comfortable with the company expanding its equity incentive pool, likely seeing it as a growth driver. Similarly, the rolling stock option plan also got the green light. Over 351 million shares approved it, with around 4.6 million against. This shows a clear shareholder preference for these types of long-term incentive structures. Finally, shareholders also gave a thumbs up on an advisory basis to the compensation of the company's named executive officers. This means they are saying that, generally speaking, they are okay with how the top brass is being paid. The vote here was also strongly in favour, with around 350 million shares for and about 5.1 million against. This is often referred to as a say-on-pay vote, and while it is non-binding, a strong positive vote indicates shareholder confidence in the executive compensation strategy. On the same day, the 18th of September, the company also issued a press release summarizing these voting results. It is standard practice to put out this kind of information to keep investors informed, and as is typical, they've attached some key exhibits. Exhibit 10.1 is the actual text of that amended and restated restricted stock unit incentive plan, which we've discussed, and Exhibit 99.1 is that press release about the annual meeting results. There is also a cover page interactive data file for those who like to crunch XBRL data. So what is the takeaway here? Bunker Hill Mining Corp seems to be actively managing its shareholder relations and incentive programs. The significant increase in shares for the RSU plan, coupled with the approval of the rolling stock option plan, suggests a company that's focused on motivating its team and aligning them with long-term value creation. The strong shareholder votes on these matters, including the executive compensation, indicate a general level of trust and support from their investors for the current path. Looking at the bigger picture for Bunker Hill, their operations in Kellogg, Idaho place them in a region with a rich mining history. The focus on these stock-based incentive plans could be a sign that they are entering a phase where they need to heavily incentivize their workforce to drive exploration, development, and production. Without specific financial tables in this particular filing to analyze, we can dive into revenue or profitability trends directly from this report. However, the approvals we've seen today are foundational. They give the company the tools to reward its people, which, if managed wisely, can translate into better operational performance and ultimately better financial results down the line. What are the risks? Well, increasing the share pool for incentives can lead to dilution for existing shareholders if the stock price doesn't rise commensurately. Also, the success of these plans hinges on the company actually achieving its operational and financial goals. If the stock price falters, these options and units might not hold much value, potentially leading to dissatisfaction. The broker non-votes are also a point to consider, often meaning that a large number of retail investors are not actively engaged in these votes. In conclusion, Bunker Hill Mining Corp has secured key approvals to enhance its employee incentive programs, signaling a commitment to growth and talent retention. The shareholder confidence shown in these votes is a positive sign, but the real test will be in how these plans contribute to the company's operational and financial success in the coming years. Alright, that's our breakdown of Bunker Hill Mining Corp. As latest filing, what do you think about these stock plan changes and the shareholder votes? Let us know in the comments below. If this deep dive was helpful, please give this video a like and subscribe for more corporate insights. And don't forget to join our growing Discord community. The link is in the description. Thanks for watching, and we'll see you in the next Decode.